Welcome to Yadnya Investment Academy. I'm sure you must have heard the term risk profile a lot of times. This video is going to talk about what risk profile basically is and what are its various types. Now, how much risk can one tolerate basically defines one's risk profile. There's another factor called as risk-taking capacity, wherein you have to take a holistic view of one's income stability, wealth accumulated, number of dependents, goals, investment horizon, etc. But in this video, we're going to talk about the kind of investments one is comfortable with, can tolerate, and can sleep peacefully with, which defines one's risk profile. Let us take an example to understand what is a risk profile. Let us assume there are two people, Mr. A and Mr. B. Both A and B have accumulated enough wealth for their goals. So their goals have been satisfied. They have earning years still in hand and they are earning well. But at this stage also, when all of their goals have been satisfied, when it comes to investing what they are earning now, Mr. A is not comfortable putting his hard-earned money into equity investments. The daily fluctuations in the equity market bother him. He is comfortable putting his money into debt instruments like fixed deposits, etc. And on the other hand, there's Mr. B. He understands that equity investments are for long-term investing and the daily fluctuations do not bother him. He is perfectly okay putting his money into equity investments and can partially allocate some of it to debt investments as well. So the kind of investments you're psychologically comfortable with define your risk profile. From this example, Mr. A seemed to have a secure kind of a risk profile, whereas Mr. B seemed to have a growth kind of risk profile. So let us look at the various kind of risk profiles. What is the percentage of equity and debt investments they are comfortable with, and what is the percentage returns they should expect? Risk and returns are directly proportional. The more risk you take, the more returns you can expect. A person with a secure kind of a risk profile would put in 100% of his money into debt investments and would allocate 0% of it to equity. Such a person can expect post-tax returns of around 6% on an annual basis. Next profile is of a conservative investor. Such a person would put in 80% of his funds into debt instruments, whereas would allocate only 20% of it to equity instruments. Such a person can expect returns of about 8% post-tax on an annual basis. The next kind of a profile is of a moderate investor, wherein he allocates 50% of his funds to equity and 50% to debt. Such an investor can expect post-tax returns of around 10%. The next kind of risk profile is of a growth investor who allocates major portion of his funds, that is 80% to equity and 20% to debt. Such an investor can expect returns of about 12% on an annual basis. Then comes the aggressive investor who allocates 100% of his funds to equity and 0% of his funds to debt. Such an investor can expect returns of about 15% on an annual basis. Now that we know the proportion of equity and debt investments each risk profile would go for, let us look at the investment options these risk profiles would be comfortable in investing. A person with secure kind of a risk profile should not go for any equity investments, and in case of debt, he should invest into fixed deposit, tax-free bonds, debt funds, etc. A person with a conservative kind of a risk profile, in case of equity, should go for large cap funds, and in case of debt, should invest into fixed deposit, tax-free bonds, debt funds, etc. A moderate kind of a risk profile investor should go for large cap funds, diversified equity funds, and balanced fund in case of equity, and in case of debt, he should go for fixed deposit, tax-free bonds, debt funds, etc. A person with a growth kind of a risk profile in case of equity should invest into diversified equity funds, mid-cap funds, and stocks directly. And in case of debt, he should go for debt funds and funds that invest into government securities. A person with an aggressive kind of a risk profile in case of equity should invest into mid and small cap funds and stocks directly. And there shouldn't be any debt allocation to get the desired returns of about 15% that we just saw in the earlier table. So today we saw what exactly is a risk profile, what are the various kind of risk profiles, what proportion of equity and debt investments each risk profile would go for, what are the various investment options one should select to get the desired returns. Hope after watching the video you can judge what is your own risk profile. Friends, thanks for watching the video. Watch this space for more such topics. Until then, happy investing. If you have any questions, let us know in the comment section below our videos. And if you like our videos, please do subscribe. Thank you.